Is Disney more compelling longer term if you believe they're going to be able to stitch together the Disney Plus data that they've got, plus the parks stuff, and somehow create more insight, drive more business and higher value through that direct relationship?
Right. I think you're hitting on the asset that most investors miss, which is the direct relationship to consumers. They've always had connections to their consumers through the parks, and now they have 159 subscriber emails and relationships from their DTC business. So they're going to try to bring you into the Disney fold when your kids are 4 and not let you or your kids out of that relationship until you die, essentially. So they are trying to find they're going to have your consumer data and drive revenue from that over decades.
What you're describing there, Laura, is this flywheel that another company, Amazon, has been so successful in creating. So if that's true, then why the hold? Aren't they going to continue to add more to this ecosystem, get more of our dollars, more of our data?
Yep. I just, I think this streaming service is costing them a lot more money in the near term. And this is a company that used to trade on EPS. I've been covering it for 20 years, and it just doesn't trade on EPS anymore. But call me an old dog, hard with new tricks. So the streaming assets are wonderful, and they have a lot of long-term value, especially in their data. But, I would like to see EPS growth as those parks open. What's so funny is we're all talking about streaming today, which is fantastic. But let's recall the CEO here ran parks for over a decade. So I am highly confident that these parks are going to do fantastic once they're allowed to open regulatorily and go back to full capacity.
Good point. We are all talking Disney Plus. There is a lot of discussion around parks. Something I'm not hearing a ton about, though, is sports. I mean, as sports returns to a normal cadence, where's ESPN Plus position? Could this sort of be a bright spot? Do you think that they are able to make big strides in this space, especially, as they get the UFC contract and more live sports moves to streaming?
Yeah, the first quarter, linear networks, which is primarily ESPN, really saved them $2.8 billion of EBITDA, up 15% year over year. So a lot of their free cash flow on the positive side coming from this empire is these linear networks. And already, as you said, the second quarter last year, all live sports was essentially off. So the numbers start getting really big really fast as we go into second, third, and fourth calendar quarter of this year for Disney, because all their sports is going to be back being played and viewing up. And so we're just waiting for venues to open in the real world.
Laura, finally, I know cruises are, comparatively a small part of the business, but it does seem to be the epicenter of everything political regarding vaccine passports and testing and CDC scrutiny. Cruises were an issue pre-COVID. We had our episodes. I just wonder how you think they're going to manage it, what their biggest concerns are.
Yeah, I think cruises is probably going to be the last thing to come back. I think it will come back after theaters. But I think, again, this is just about touch points to the Disney ecosystem. We talk about like the cable bundle or the streaming bundle. Bundling in cruises is just another form of consumer immersion in the Disney cult, let's call it. So I expect that super fans to take advantage of the cruises, but it's a narrow group of people, meaning you don't need 1 million people. You don't have room actually for 1 million people a year to do cruises. So it's just it's the tip of the spear for the most avid Disney super fans. And it's a great touch point for those fans, but I don't think it drives the empire's upside value here.